All right, welcome back to another episode of Asset Coach and Tax Strategist. And so we're continuing our series on economic termites, and we've talked about taxes, we've talked about inflation. And so today we're going to talk about time. And well, Bob, how in the heck is time a termite? Well, guess what? We just spent 15 seconds on the introductions, and that 15 seconds is gone. That eats away. And so, how many times have you thought to yourself, well, I really should have, I wish I had started saving for retirement earlier, or I really wish I would have made this decision before, right? And when we say these things because that time is now fleeting. It's gone. We can't get it back. It's the one commodity that is impossible for us to get back, except for when it is about value in dollars. Value in dollars, we actually can. But that's the little seed I'm dropping and little carrot I'm dangling in front of you. Before we talk about that, let's go back into our book and look at Economic Termite number 3, time. Now you can go through here and read through this, and we'll talk about that whole doubling of a penny. Hey, if I gave you $1 million today, or I gave you a penny that doubled every day for 30 days, what would you do? Right. And then, of course, we know the end of the story is that a penny doubling every day, you end up having more money than if you would have just having that $1 million, right? So really right at day 28, you'd have more, right? With a pen. But if you waited 2 extra days to 30, you'd have $5.3 million. Pretty spectacular, right? Now, doubling a penny a day with taxes, where we have the gain and the gain is taxed at 30%. Then all of a sudden in the 30 days, now you have 1.8 million. So still better than choosing the million, but you can see how the taxes eat away at the value of what you could have had. Okay. And so that's a significant understanding of how taxes eat away at our time. Procrastination. We talk about procrastination. And if I invested $2,000 in an account for 8 years, and then I have person B who didn't, and then after the 8 years, starting year 9 to year 21, they did $2,000 a year. So person A only put in 16,000, person B put in 26,000. What happens in 30 years? Person A still has more than person B, even though they put in $10,000 less. Well, how's that possible? That's the power of compounding, right? The eighth wonder of the world that Einstein said is compounding. So this is very important to understand from a time perspective. What is the value of it? So now, why am I talking about this? How do you buy back time? Notice I use the term buyback. Now, our previous 2 termites, what did we talk about? Taxes and inflation, the silent tax, right? If I did tax planning and I paid lower, as I showed you in that example, the penny doubling, and I showed you how I can minimize my tax liability using the IRS tax code in the legal system as it is today, could I buy back time? And the answer is yes, because you're using the tax dollars reinvested from going to the government to reinvest it back to you to allow the value of your wealth to grow, therefore buying back time. Now, if we're able to do that and we're able to utilize our understanding of inflation or understanding as a business owner that there are certain expenses I have in my business versus my personal, well, what if I'm a W-2 employee? Well, you got to figure out how to take off your I'm going to be taxed as an employee cap, and I'm going to be taxed as a business owner cap. Well, how do I do that? I'm not going to quit my job. Well, no, but There are strategies and ways to do that. And that's what we teach our W-2 employees, our high W-2 earners, how to do that. What's that look like? Why do we want to do that? How do we shift from a W-2 to a business owner without quitting my job? Oh my goodness, that's sorcery. No, it's using the tax system and the legal system of how it was designed. It's understanding the rules so you can play by the rules. That's it. It's taking that knowledge and implementing that knowledge. And then by doing that, now you're able to utilize the business owner cap and be able to utilize revenue and expenses to be able to help you buy back time. Okay, so we work with a ton of physicians. Go check out our Wealth Mavericks podcast, and that is just for physicians. And when we work with physicians, we're dealing with buyback time in a huge way, because think about it as a doctor. They give up a decade of their life for education, right? So they graduate at 18 and they're going to work in a learning facility, becoming a doctor for another 10 years. So, and the more specialized they are, it adds years to that. Okay. So let's just say 10 years. So now instead of 18, they're 28. They gave up a 10 years of earning. And if they got debt to help them in that learning process, they're in an even bigger hole. When all their friends and colleagues and family members who didn't go down the medical field went into business or went into the workforce, started earning and saving. And so the doctors have 10 less years now. Okay. Now they're in practice, whether as an employee or as a business owner. Now they're in practice and they're like, ugh, I don't like this system. Being a doctor, all I'm doing is just prescribing medication. What can I do? Right? Obviously, that's a generalization of physicians, right? There's tons of specialties, there's tons of value. I'm not minimizing or diminishing that. I'm just saying from a perspective of when we get into what we trained to and what we were excited to, now all of a sudden it's not what we thought it could be. Right? So let's say they go in with wide open eyes. They go, yes, I'm going to do this, but I'm not a physician where I'm going to work like previous generations to where I'm 70 or 80. It's not, this is my career. It's my job. It's not my lifestyle. Right? And there's a difference. There's a mental shift as a job versus a career versus a lifestyle. There's 3 separate mental shifts there. A job is you're just clocking in, clocking out. You're putting in the time that you've agreed to with your employer. Okay. That's your time. As a career, you're building into yourself. You're building this out. You may have a practice. You're building something that you can maybe hire other physicians. You're building a business per se. You're building a career that's going to be long lasting and it's going to go to age 65, 70 or so. But in a lifestyle, it's who you are. It's what embodies you, right? There is no end date other than death, right? Now you may be one of the 3, I don't know. But imagine that you all of a sudden you're saying, I'm at 68, I'm done. Okay, so 28 to 68, you have 40 years, right? But you got to pay all that debt back, right? If you had debt. So that may take 10 years. So now you have 30 years. So you have basically the point is that you have this truncated period of time. And so that's why a lot of doctors feel like they've lost time. And so they go into these deals, they call them dumb doctor deals. They go into these deals to try to make more money, to do certain things, but they never learned about finance. They never learned about business. They never learned about this area. Now, some have a unique perspective and a unique gift of understanding it already. They're a business owner who happens to be in the field of medicine versus a doctor who is a practice owner, right? There is a difference, right? Not one's better than the other, just a distinction, right? You have some people that are in law that they're a business person who happen to be in the legal system, or they happen to be in a bike business, or they happen to be in the car business, or whatever they are, right? They've got business minded in their blood, and no matter what they did, they probably would be very well and do very good at business. Okay. They just happen to be in the medical field. That's okay. Nothing wrong with that. But my point is that they're in this position of truncated time. How do I buy that back? Well, one of the things we talk about is the fraternal twins, the correlation between tax savings and wealth accumulation. You cannot have one without the other. Unless you're going to attain wealth, you have to be able to reduce your tax liability. And to reduce your tax liability, you do have to be able to have some kind of wealth, in the sense that the more you have, the business income, the more of the tax code you use. And so the more you savings and taxes means you can put more into your wealth grows, and more you get to taxes, you get more access to the tax code, and all of a sudden your access to the tax code and the legal system grows bigger and bigger and bigger. That's why the wealthy keep getting wealthier. Why? Because they're buying back time. They're utilizing tax code. They're not giving away 50% if they're in California, 50% of their hard-earned dollars to go to local and state and federal governments. They've hired people. They figured out ways to utilize the tax code as it's written to be able to reduce that. So on $1 million, saving 50%, that's $500,000 that can go back to building your $1 million to 4 million, and so on and so forth. So it's very important to understand that correlation, to buy back time. If you don't, it is an economic termite, and time will eat away at your wealth because of taxes and inflation. Stand there, stay stagnant. That's your choice. Or utilize the first two economic termites, understand how those affect you, and start learning how to change that. That's your decision. That's what you get to decide. Yeah. And notice, wealthy people don't have just one business. They have multiple businesses. It's not by accident. It's by design. Okay. It's by design. So hopefully this was helpful. Buy back time by understanding those first two economic termites. Okay. Appreciate you guys joining us. If you like our content, give us a thumbs up. Subscribe if you haven't subscribed. Share us with your friends and family and colleagues. Do not keep us a secret. All right. We are not Lord of the Rings. Share us. Distribute us to everybody you know. And if you have any comments or anything, topics that you'd like us to discuss, please put those in the comments section as well. Other than that, God bless you. Thank you so much. I am an asset coach and tax strategist.